we're going to open up for questions from the audience. But before we do, I'd like to ask the people in the back to keep quiet a little bit longer, and then we'll move on to networking, okay? So any questions from the audience? There's one.
You said that you recently become unlisted privately. Then why doing IPO at all? I mean, what's the reason to do that?
Great question. So first, the idea of an IPO, I don't know if anyone knows what it is, but a company is private, held by specific people, shareholders, right? And at some point when companies going public means that the company opens up to the public so anybody can buy the shares, and then it's publicly traded on the stock market. So just to set the context. And the reason, why do people even do that, right? So the reason is typically they raise money. And historically, in order to raise a lot of money to unlock the next growth or the next potential of the company, companies had to IPO. Today we're seeing something interesting in the private market where there's a lot of private investors that can invest a lot of money, like Uber is a crazy example of a company that can raise billions of dollars. People didn't do that in the past, right? Salesforce IPO'd with $20 million in revenues. Nobody can IPO with that today, but they had to because nobody would give them more money, right? So when companies go IPO, there are two main reasons: to raise a lot of money. But the other thing of it, which is very, very important, the other part of it is credibility and transparency. A public company is very credible, so people know, okay, this is a serious company. Private company, who knows what happens there, right? People can say whatever, right? When a company is public, their financials are out there, right? They're under a lot more scrutiny in terms of audits, financial audits, and so forth, which adds a lot of credibility. So those two main factors are why people go and become a public company. And there's another aspect of it, and that's what's called liquidity for the previous investors and for employees. So employees have shares in the company, investors have shares in the company. There has to be this event in which these people can sell those shares, right, and get money, right? And an IPO is an event such as that, right? So the only way to stay private is to have crazy profits that allow you to pay people dividends, but that is extremely rare, extremely rare.
Anybody? Questions? There's one here.
Hi. Going through different stages of company seed rounds, how did you look for investors? Simply going online and searching, or connections you build up over the time?
Yeah, so, well, you can go online and research, right, to understand who are the people you want to talk with, right? But when you actually have to make the connection, it has to happen through a warm introduction. You will not cold email someone and they're going to write you a check. It might have happened occasionally, but generally it's not the case, right? So the best thing to do is to familiarize yourself with who are potential investors, building relationships with them before you need the money, so they know about the company, they can see your progress over time, they can know who you are. So when you want to raise the money, you can just call them and say, hey, we made a bunch of progress, I want to come in and show you what we've done, right? And you start the conversation from a completely different place.
But looking in Krakow itself, how is it possible for us to get those connections through here and money is on the US?
First, I think there starts to be some money here. Well, definitely it's not at the scale that it is in the US, right? But there is some money here, so you want to start locally. And yeah, you have to work hard. You have to build those bridges. You have to build those bridges even into the US, right? But there are companies who did that successfully, even in Krakow, right?
So continuing the joke about the worst hire. So can you share with us some stories about the worst hires in your company that you actually had to fire people?
Yes. Well, we never had anything that was crazy. So actually recently I had dinner with some folks that told me some insane stories. Like, I'm talking about insane, like stealing data and selling it to competitors, and just stealing money from the company, where I'm like, wow, well, I mean, it didn't happen in base, right? So in base, I think the things that we did have in the past, right? You know, as an example, there may be somebody who's really great, might be a great person and super smart, but not a good culture fit. They didn't have a kind of similar principles to what other people had, kind of harder to work with, right? Didn't have the same mentality and the same drive to push things forward, right? And then it's always a super tough decision. Because you might go wrong and somebody hit a rough patch, right? But you have to make it, right? But I don't think that we ever had this like complete disaster. Not yet, at least.
Hopefully it stays this way. Last 2 questions, if there are any. I can see there one.
You already mentioned some examples, but can you share more? How do you measure success, and what were some of the examples of milestones that you celebrate somehow?
So for different companies, measuring success is going to be different in the sense that a consumer company, right, is very different than an enterprise software company in that sense. The eventual success of any company is revenue, right? You back from that, you back from that revenue, right? In case of consumer companies, today people talk a lot about monthly active users or daily active users, right? What is the engagement, right? Because you want to drive crazy engagement in the product, because this is what enables you to unlock a business model that helps you drive revenue. For enterprise software company, it's customers, right? So specifically for SaaS companies, right, there's a number that's called the monthly recurring revenue or annual recurring revenue. That's kind of our most important number, right? So I think that SaaS companies, for instance, want to celebrate $1 million of ARR, $10 million of ARR, and $100 million of ARR, right? After $100 million of ARR, you can go and pretty much IPO, right? And kind of unlock again the next level of growth. You have, when you start a company, you want to think about what is that thing that eventually unlocks revenue. It has to, right? Even if today it's not, it has to. So for us in the very early days, well, all we wanted is for people to sign up for the application and use it, right? We had this freemium model, and for the first, I'd say, probably after we raised the seed round, for a year and a half, this was only what we were focused on. As many signups, as many people to just try the application so we can learn fast, improve the application, right? Later we started focusing on revenue. Later we started focusing on bigger customers, right? But for different companies, it's different. Needs thinking.
Was it ever a problem in fundraising to have a remote team?
Yes, for sure. It was not like really a remote team. So let me tell you a funny story about the seed round, okay? So in the seed round, we got a term sheet. I told that story, right? We met the partners at the VC firm and we got a term sheet. But we said, okay, let's go and meet some other investors. And I started meeting some investors in the Bay Area, right? And we got a lot of no's from those folks, right? Talking about you have to have your conviction. And then I talked with a guy called Mark Suster, who is an investor from LA. He writes a famous blog. And but I talked with him not in the context of him investing in base, it's more kind of like advice. So he was like, wait, you have a term sheet? I said, yes. And you didn't sign it yet? I said, no. Are you fucking crazy? I was like, what do you mean? I said, did you ever consider how does your story sound? I said, well, I think it sounds great, right? We have a great story. So let me try to reflect to you the story, how it sounds to an investor from the Bay Area. There's this Israeli guy with this funny accent in English, random guy, who lives in Chicago, who has a couple of partners in Krakow in Poland. And of all the people in the world, they are going to win against Mark Benioff and Salesforce. And I told him, you know what? I think we're going to finish the call because I have to sign the term sheet, right? And I think that today it's now I think today it's different, right? And obviously down the road, as you have more revenue and you proved yourself, it's a whole different story. And also I think there's a lot more openness today in the Bay Area for that concept. So a lot of companies, have offices outside of the Bay Area, but especially in the beginning, it's significantly easier for 3 computer science majors from Stanford who interned in Facebook and Google to start a company and get funding. It's as simple as that, because these people are like, okay, yeah, this kind of pattern matching, right?
Uzi, thank you very much for this talk and your presentation. I think it was awesome. Hope to see Base grow into a $100 billion company, and I hope Krakow will be part of it. So you will grow the team here and maybe also expand also beyond just developers, maybe some more people in marketing and sales. So it was great having you here, and I hope we can sort of kick it off.
Yeah.
Networking.
Thank you all, and thank you for organizing the event. And see you in 3 years.
Thank you.